Welcome to the deep dive. We take the sources you send us and, well, we try to pull out the key insights quickly and clearly.
That's the plan.
Today, we're diving into the MS&AD Insurance Group, specifically their 2024 integrated report. So think of this as your fast track to understanding what makes this major insurance player tick.
Exactly. It's a pretty dense report, as you'd expect. Our job here is to filter out the noise and focus on, their business segments, the financials, their growth plans, and importantly, how they plan to create shareholder value.
Right, aiming for clarity, not confusion.
Precisely. We want you to walk away with a solid grasp of things without needing hours to read the whole document yourself.
Okay, so let's start with the basics. MS&AD, what are the main parts of their business? The report lays out sort of three core areas.
That's right. Three main pillars. First, there's domestic non-life insurance, and they make a point of saying they're the non-life insurance group most chosen by customers in Japan. That's based on their net premiums written share for fiscal 2023. So definitely market leader there.
Okay, number one in non-life in Japan. That's significant.
It is, and it comes with, the benefits of scale, but also the challenges of a mature market. Second, you have domestic life insurance. Here, they're number 9 among domestic companies and groups by premium income. So still a major player focusing on a market dealing with, well, an aging population and rising healthcare costs.
Big societal trends impacting that segment then.
Absolutely. And the third pillar is their digital and risk-related services. This seems to be a growing area, looking beyond just traditional insurance payouts towards broader risk solutions.
And the overall scale we're talking about.
It's substantial. Consolidated net premiums written hit 4,261.7 billion in fiscal 2023. That gives you a sense of the size.
4.2 trillion yen.
Okay.
And they're managing all this under a specific plan, right? Their medium-term management plan.
Yes, the current one runs from 2022 to 2025. The guiding principle, their sort of tagline, is to grow together with society as a platform provider of risk solutions.
A platform provider. So more than just selling insurance policies.
Exactly. It's about being fundamental to managing risk in society. And this rests on 3 basic strategies. First is value, which they frame as CSV creating shared value combined with DX, digital transformation.
CSV times DX. Okay.
Second is transformation, focusing on internal business reforms. And third is synergy, which is all about leveraging the strengths across the whole group.
And they tie this to some broader goals.
They do. They talk about aspirations like contributing to planetary health, so environmental symbiosis, ensuring societal safety and security through resilience, and promoting the well-being of diverse people.
Okay, that value piece CSV combined with DX. How does that actually, play out in their main domestic non-life business?
Good question. In that core segment, a big focus is definitely on profitability, especially in voluntary auto and fire insurance lines.
The big ones.
Right. They're doing this through, product tweaks, premium rate revisions to better match risk, disciplined underwriting, being more selective and managing their line sizes carefully. They're also looking to grow in casualty insurance.
And what advantages do they lean on there?
They highlight having 3 distinctive insurance companies under their umbrella, what they call the largest sales network in Japan, and, just a generally strong network and market presence.
So beyond those financial levers, what are they doing differently on the ground? Any specific initiatives?
Yeah, they're pushing digital quite hard, using tech for, say, faster and more accurate loss investigations after natural disasters, which is obviously crucial in Japan.
Definitely.
They're also boosting their online customer service options. We see specific things like their telematics auto insurance. It's called Tough Mimomoru Automobile Insurance Next. Uses a smartphone app.
Right, tracking driving behavior.
Exactly. And they've rolled out an AI system to detect potential fraud in automobile repair claims, trying to improve efficiency and accuracy there.
Okay, interesting. Let's pivot to the domestic life side. You mentioned the demographic pressures. How are they responding?
Well, they operate through 2 main subsidiaries there. Mitsui Sumitomo Iowa Life focuses more on protection-type products, while Mitsui Sumitomo Primary Life handles asset-building products like annuities.
Different needs, different companies.
Right. And their product lineup directly targets those issues of aging and healthcare costs, things like income guarantee insurance if you can't work, palliative medical cover, nursing care, and dementia insurance, plus, whole life for inheritance and pension plans.
And I saw mention of something called MSA Care. What's that about?
Yeah, MSA Care seems pretty central. It's positioned as a healthcare service that provides support before and after the insurance protection kicks in.
So prevention and recovery, too.
Exactly. Prevention, early detection, helping manage conditions to avoid serious illness. And it seems to be getting traction. The report says it's been introduced in over 2,500 companies already.
Wow, okay.
They also launched apparently the first individual pension insurance where the payout actually increases along with an index. And they're pushing cross-selling between life and non-life.
Trying to leverage that group structure.
Definitely. Mitsui Sumitomo Iowa Life had a 21.1% cross-selling ratio, and Mitsui Sumitomo Primary Life sold over $50 billion through those channels. So it's working to some extent.
Okay, so strong domestic bases, but MS&AD is also pretty big internationally, isn't it? The report highlighted growth there.
Oh, absolutely. International has been a major growth area. In fiscal 2023, non-life premiums written overseas were $1,620.3 billion, and the international segment contributed $139.5 billion to group-adjusted profit.
That's a serious contribution.
It is. And they claim the #1 spot in the ASEAN market based on gross written premium, so a strong position in Southeast Asia.
How are they managing that global growth? Any specific strategy?
A key thing they mention is the Tenkai project. It's basically an internal framework for sharing knowledge and best practices between Japan and their overseas units.
Sharing what works, essentially.
Yeah, across things like DX, customer experience, IT, asset management, underwriting, reinsurance, the whole gamut.
Yeah.
So if they develop a good data analytics model for natural disasters in Japan, they can try to adapt and roll it out, say, in Thailand or Indonesia.
Makes sense. Creating synergies. Any other big international moves?
They're focusing on beefing up their digital platforms internationally and partnering with local platform providers in Asia, targeting that growing middle-income segment. And a significant move was acquiring Transverse Insurance Group in the U.S.
Strengthening their U.S. foothold.
Exactly. That seems aimed at boosting their entry and capabilities in the American market. Plus, they're looking at investing in specialty insurers, ones with, lower catastrophe risk and stable profits, diversifying the portfolio.
Got it. And this digital transformation, or DX, it seems to pop up everywhere in their strategy. What's the overall picture there?
It really is central. MS&AD Inter-Risk Research and Consulting, one of their group companies, plays a big role in tying DX together with those CSV, creating shared value goals.
So using tech for good, basically.
Yeah. That's the idea. Moving beyond just paying claims to offering solutions before and after compensation and protection. Think accident prevention, making things easier if something does happen, faster recovery, stopping it happening again.
Right. Proactive risk management.
Precisely. Cybersecurity is a big piece of this, offering things like vulnerability assessments for whole supply chains, specialized incident response, and they're investing heavily in AI.
AI seems unavoidable these days.
Tell me about it. They aim to get around 30,000 employees using generative AI, build up a team of 7,000 digital specialists and 100 data scientists by 2025. They're bringing in outside expertise, too.
Ambitious targets.
Yeah. And practical things, too. Like they launched an SMS service to notify customers about the status of their procedures. And Inter-Risk is actively exploring what else they can do with generative AI.
Okay, paints a picture of a forward-looking company. But the report wasn't all positive, was it? It mentioned some significant headwinds and challenges.
No, absolutely not. And credit to them for including it. A major issue was the business improvement orders that two of their main companies, Mitsui Sumitomo Insurance and Iowa Nissay Dowa Insurance, received from the Financial Services Agency.
Yes. That was about premium adjustments in corporate insurance.
Exactly. Price fixing, essentially.
Yeah.
It's a serious issue. They put together improvement plans back in February 2024, and they state they're undertaking major reforms to their business style to rebuild trust.
A big internal challenge, then.
Huge. Reforming value provided, transforming the business structure, improving productivity and profitability, it's a big undertaking. On top of that, they're facing the same external pressures as everyone else. Inflation, rising staff costs, more frequent and severe natural disasters, and a tough reinsurance market where rates are going up.
So internal repair work plus external market difficulties.
Right. And one other internal point of discussion mentioned is the potential merger of those two main non-life companies, Mitsui Sumitomo and Iowa Nissay Dowa.
Really? Merging them.
It's being discussed at the board level, but it's balanced against the progress they're making with their one platform strategy, which is trying to standardize and integrate their back office functions anyway. So it's a complex strategic choice.
Lots to juggle. Okay, let's switch to the numbers. How is the group performing financially? What are the key highlights?
All right, financials. The big one they focus on is group adjusted profit. That came in at 379.9 billion for fiscal 2023.
Okay, almost 380 billion yen.
Yeah. And their target is pretty punchy. They want to increase that by another 380.1 billion over the next 2 years, so essentially doubling it from the FY23 base.
Wow. Where do they expect that growth to come from?
They break it down. About 309 billion from domestic non-life. That includes gains from selling off strategic equity holdings, plus better core profitability. Only about 4 billion from domestic life, and a significant 67 billion from the international business driven by Lloyd's, reinsurance, growth in the Americas, and their Toyota retail partnerships.
Okay, so heavily reliant on non-life improvements and international expansion. What about return on equity?
Good point. Group adjusted ROE was 9.0% in FY 2023. They call this their most important numerical management target. It basically measures how well they're using shareholder money to make profit.
And how do they track that?
They break ROE down into return on risk, or ROR profit relative to risk taken, and their economic solvency ratio, ESR. The ESR is key for showing financial strength. Their target range is 180% to 250%.
And where are they?
They were at 229% in fiscal 2023, so comfortably within the target range. Seems financially sound on that measure.
Okay. What about the top line premiums and the core insurance profitability?
Right. Top line consolidated net premiums written was that huge a 4.26 trillion figure in FY 2023 we mentioned earlier. Shows the sheer size. But the core insurance underwriting profit, well, that was actually a loss in FY 2023, minus 221 billion.
A loss from the actual insurance business itself.
Yes, before investment income and other things, but they're forecasting a swing back to a profit of 214 billion by fiscal 2025.
How do they plan to achieve that turnaround?
Primarily by lowering the loss ratio, or paying out less in claims relative to premiums, and through those premium rate revisions we talked about. Basically, charging appropriately for the risk. They're also focused on cutting the business expense ratio.
Bringing down costs.
Exactly. That one platform strategy for integrating systems and processes is key here, streamlining the back office.
Okay. And the overall bottom line, net income, and what's happening with their assets.
Net income attributable to owners of the parent, the final profit figure, showed a big jump. It was 369.3 billion in fiscal 2024, up significantly from 211 billion the year before.
That's a substantial increase. Due to what? Better underwriting investments?
Likely a combination. Some improvement in underwriting in certain areas, perhaps, but probably also strong performance from their investments and maybe initial gains from selling some of those strategic equities. Their total assets also grew, reaching over 7.5 trillion by March 2024.
And that strategic equity plan. Sounds like a big deal.
It is. They're aiming to get rid of all their strategic equity holdings, cross-share holdings, and other companies over the next 6 years. They expect this to generate several trillion yen in gains on sale.
Several trillion yen. What are they doing with all that cash?
That's the crucial question for shareholders. Their stated policy is to return 50% of the adjusted profit from those sales directly to shareholders.
50%.
Yep. They estimate the total gains at around 3.6 trillion, so that implies about 1.8 trillion coming back to shareholders through dividends or buybacks. The rest is earmarked for growth investments and other initiatives to boost future earnings.
So a significant return, but also reinvestment.
Exactly. They stress the importance of continuous and stable shareholder returns. The CEO is making dialogue with shareholders and investors a priority, trying to communicate this growth story.
And are shareholders engaging?
Seems like it. The report mentions dialogues on sustainability targets like greenhouse gas emissions and also investor pressure on dividend payouts, apparently. One company in the group upped its payout ratio goal after engagement.
Interesting. But also pushback.
Yes, it also notes cases where shareholder proposals were voted down due to concerns about low dividends or the independence of the board. So there's definitely scrutiny on governance and returns. It's about finding that balance. Investing for growth, rewarding shareholders, and keeping the company financially strong.
Okay, pulling it all together then. Based on this report, what's your overall take on MS&AD's business prospects moving forward?
Well, look, they seem very focused strategically. Driving growth, especially internationally, is clearly a priority. And that integration of digital, the DX piece, across everything they do feels central.
The CSVX DX transformation synergy framework.
Right. Those core strategies seem to be the roadmap. Plus, their commitment to tackling sustainability issues through their products and services, like that green resilience idea, Using nature to help with disasters feels like a genuine part of their identity now.
But the challenges remain.
Absolutely. The big one is execution, especially rebuilding trust and strengthening governance after those FSA orders. Compliance, particularly with competition law, has to be top of mind. And they still need to navigate all those external risks, financial markets, cyber threats, climate change impacts.
It's a complex landscape for any insurer.
It really is. And finally, their focus on human capital, developing their people, pushing DE&I, focusing on well-being, that signals they understand that achieving all these ambitious goals ultimately depends on their workforce.
So it sounds like a company with a clear path laid out, significant opportunities, particularly internationally and through digital, but also facing some serious hurdles, both internal and external.
That sums it up pretty well, I think.
Yeah.
They have the scale, a diversified business, and a plan. But the execution in this changing environment will be key. The next few years will really show how effectively they can navigate everything.
This has been really illuminating. A proper deep dive into MS&AD's strategy and health, all thanks to their integrated report. Hopefully it gives you, our listener, a much clearer picture.
Yeah, and it really highlights just how tied the insurance industry is to, well, everything else happening in the world society, the environment, the economy.
Absolutely. Which leads to a final thought.
Hmm.
Considering MS&AD's big plans for transformation and tackling these global challenges, what do you think are their single biggest opportunities and perhaps the most significant potential roadblocks they might face on the way to their 2030 goals? Something to mull over.
Definitely food for thought.
And remember, if you have reports, articles, or any sources you want us to tackle in a future deep dive, please do send them our way.